You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters of Trading Live. Masters of Trading Live, I get on here every day the market's open, 11 a.m. Eastern Time. We'll go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I've done nothing but trade my entire career. I got into the business in 1997. I was on the floor of the Chicago Mercantile Exchange for 5 years, then the Chicago Board of Trade, then I traded on the Chicago Options Exchange, and that's really where I learned to value options to the penny. Now I get on here with you fine folks. We always get on here 10 minutes early, say good morning. Thank you guys for joining. I really appreciate you guys being here with us. The challenge is growing really fast. So do me a favor, guys. If you're on here, give a subscribe. That way you'll get an alert for every 11 a.m. show. So subscribe, give a thumbs up. I really appreciate it. Let's go to the trade. I got the chat up too, guys. If you have any questions at all, I'll stay on for as long as you need to make sure all your questions are answered. But let's go to the screen. We had a phenomenal week last week, and it's setting up to be kind of the same. This market right now, strong like bull. Strong. Let's talk about it. We get a lot of questions about the easiest way to join our community, guys. masterthintrading.com/challenge 2025. That's the most affordable way to join the community. And through that, I believe I can teach anybody how to trade options within 7 days. You get into the community, so check it out. All right. I want to start here. And I want to start here because this is the difference between the Nasdaq and the Russell 2000. Okay? So going back all the way for 5 years, let me pull up my pen here. Okay. So does this chart make sense, guys? Do you guys know what this chart is? Right? It's Nasdaq, tech stocks, versus small caps, Russell. Okay, that's small caps. So we look at this, it's actually one Nasdaq against two Russ is the correct ratio. But what's going on here, we start here, we are right here right now. Okay, it's called the 100% rank because right now, as we speak, the Nasdaq is the most expensive that it's been relative to small caps in the last 5 years. Okay, let me say that again. Nasdaq is the most expensive it's been relative to small caps in the last 5 years. Now, small caps have been dragging. The street thinks that we need rates to drop for small caps to run. Well, the market will anticipate rates dropping and small caps running, but the market is certainly not anticipating that right now. Because right now, guys, the Nasdaq is really strong. I'm gonna pull up some basic, just outright charts just to go over. Here's the Nasdaq, okay? I'm always gonna look at things, looking at the most amount of data first. So if I look at 5 years using 1 week, that's what she looks like, okay? Right now, Nasdaq is taking out all-time highs. There is zero reason to be bearish right now. Look at this chart going back 5 years. We are sitting at all-time highs. There is no reason for anybody to say, wait, it's too high. It's got to go down. Bearish. No, not happening. It's not happening. The Nasdaq is super strong. But with the Nasdaq being so strong, I take you back to this chart. We know that the Nasdaq is expensive relative to the Russ, right? So what we've been doing in our community is we're along the Russell 2000. Look at the Qs. Now if I go to Russell, which is the IWM, it looks more like this, going back to the same time frame. In the same time frame, we have our high back here at the end of 2021. Tried to grab that high at the beginning of the year, went right, matched up. Liberation Day, kicked the shit out of the market, rallied all the way back. But IWM, guys, is still historically inexpensive relative to the QQQs. So if you want to get long, QQQs are strong as can be. Look for value in the small caps. It's a very sensible place right now to start building a position. And when rates eventually drop, this IWM will really follow through. So it's something to watch. Hey, Adam, great question. Adam's got a question about VIX term structure. Let me pull up a website so I can actually, okay. Great question. Great question. I'm going to repeat the question. Adam, what would the VIX term structure need to get to for you to feel bearish? So let me log into Masters in Trading here. Put it off screen so you guys don't see my login. Sorry for the dead air. I'm just pulling up VIX term structure is what that's called. I'm pulling up VIX term structure. Come on, Slowpoke. I'm having a little trouble pulling it up, guys. Just give me a second. My apologies, guys. I'm having trouble getting onto my own website. Okay, we're going to look at it a different way. So the question is, what am I going to look for this market to turn? Here's what the VIX 9D looks like. VIX 9D is actually pretty strong today, guys. The VIX 9D is just a volatility measure over 9 days. Here it is down here, still really, really offered. I'd watch the VVIX. The VVIX, guys, is the VIX of the VIX. So it lets us know how much uncertainty is in the market. It's 91. VVIX under 100 is bullish, 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 guys. So Adam, that's what I'd be looking for. Follow your VVIX. But right now, the market is just really obnoxiously strong. Okay, here's a stock for you guys. GLXY. Galaxy Digital. This is insane because right now, today, it's 0721, right? Well, look, 0714, which was last week, we saw just obnoxious, unusual option activity in GLXY. Here is the exact trade that we were seeing. 11,000 options trade. And at that time, GLXY was trading last week 21.62. Let me show you why we follow unusual option activity. What in the heavens? So look at this, guys. Last week, 0714, we saw monster buying in Galaxy, GLXY, trading on 21.62, 11,000. Well, $30.30 was this morning, and right now it's trading 31.10. once I was on the floor of the Chicago Board Options Exchange. Before that, I used to guess on a name like Galaxy. Maybe I would use technical analysis. But when I got down on the floor, I realized that all the market makers, they weren't guessing. They weren't placing a bet on Galaxy going or higher or lower. What they would do is they would just wait. They would wait and they would wait and they would wait. And they would wait until eventually somebody would come in and make a trade where they buy 18,000 options. When somebody is making a $3 million bet, a $4 million bet, a $5 million bet, I want you to think that they know more than you do. I know without a doubt somebody placing an $8 million bet or a $5 million bet on Galaxy knows more than I do. When we first shared this trade with our community, I even said, guys, I love this trade so much for the reason that I've never even heard of this company. So if I go into our Discord and if I put in LEU, which is a name we follow closely, look, 252 results. If I put in Quixo, a name we follow closely, 191 results. But Galaxy? I've had this room open for 5 years. This room has never traded. Wrong ticker, dude. GLXY, not Q. GLXY, look. 15 results, and the oldest result is 714 when we shared the original trade. So this gets me even more excited that it's a name that has liquid options. So let me show you the options. There's beautiful, beautiful liquidity in the options. And then we get to see unusual options activity in a name that I've never even heard of or I've never even traded. Those are the trades that get us so excited. So kudos to our community for finding this trade, for getting involved in this trade last week at 21. Today, it's trading 31. We like to celebrate our trades with a glockenspiel. Earnings week. I thought it'd be cool to go over an earnings trade with you guys. We went over some earnings trades last week. I want to go over another one, IBM. Full disclosure, I am very, very, very bullish IBM. I love the upside of IBM. I'm bullish IBM. The word quantum is getting into the mainstream. The company that is dominating quantum, Big Blue. IBM's been performing beautifully. I continue to be bullish, but we're not talking about my opinion on IBM. We're going to talk about earnings. So IBM, oh, thank you, Chris Warder. IBM, oh, okay, here's what I was going to do. One sec. So I wanted to look how much IBM moves after its earnings releases. And over its last 5 earnings releases, it's moved 8%, 14%, 7%, 6%, 10%. So overall, let's say IBM moves 10% for their earnings. IBM is going to release earnings in August. IBM releases earnings this week, I believe, right? July 23rd after the close. So IBM releases earnings July 23rd after the close. Let's value IBM's earnings. And how do we do that? I'm using Thinkorswim right now. In order to value the earnings, guys, 24.26 divided by the price of the stock. Okay? So we're just here. Boom, boom. That divided by that. Let me get my calculator. We got 286.63 divided by 24.26. 12%. So right now, the market is pricing in IBM to move up or down 12%. If up or down 12% is going to be, I think it's closer to 8.5% too. Right? 24 divided by 286. Come on, JR. Yeah. Don't be dumb. Sorry, guys. I even had a calculator too. Well, this changes things because at 12%, it's not so great, but at 8%, it's pretty fucking cheap. Sorry, it's pretty freaking cheap. Adam, thank you. So IBM moves 10%, right, for earnings? It moves 10% for one day. That's just earnings. There's 25 days until they expire. Right now, IBM is very, very, very cheap. Very, very, very cheap. I like the long side of IBM. I'm not going to share a trade in IBM. I like the long stock. You could play for long upside calls if you want. The problem, these are kind of expensive. Maybe you can do the 290, 305. If somebody's looking for a trade out there, guys, you can buy the 290s for 980, and you could sell those 305s for 455. And then that trade would be 530. So 530 of risk, and you can make the difference between the strikes. So if someone's looking for a trade, I'm not going to share a trade. It's very expensive. It costs a lot to trade stocks that are $300. If the stock is $30, it wouldn't be that expensive to get into a trade, but it's a $500 minimum trade per one lot of these spreads. So if somebody's interested in this trade and looking for a good way to play it, you can buy those 290s. You could sell those 305s. I like it, guys. It's a good trade. $500 of risk to potentially make $1,000. You can make 15 less what you paid. Does that make sense, guys? Both calls, Nancy, yeah. Yeah, IBM's cheap going into earnings. I'm bullish IBM. It's a great stock. You can even do some cash secured puts on the downside if you're interested. Does that make sense, guys? Is everyone subscribed? Thumbs up. Really appreciate you guys hanging out with me. So what I do now is, this is the free portion of the video. In our Discord community, we have all our paid up members. For now, I'm going to switch over to the paid up members because I have a divergence trade to share with our divergence community. So I'm going to switch over, go to all access, and during that, I'm going to talk about a brand spanking new divergence trade. Okay? Hit that button, John. Thank you for joining. I'll see you guys tomorrow. All right, guys. What's up? Hey guys, how are we? How are we?